In 2026, millions of Americans are budgeting harder than ever before, yet somehow feeling more broke every single month. People track expenses on apps, watch finance videos daily, cancel subscriptions, avoid eating out, and still end up wondering where all their money disappeared. And this is what makes the modern financial crisis feel so psychologically exhausting. For decades, Americans were told that budgeting was the key to financial stability. Spend less than you earn, save consistently, avoid unnecessary purchases, and eventually life becomes secure. But for many middle-class families today, that formula no longer feels as effective as it once did. Not because budgeting is useless, but because modern life itself has become dramatically more expensive, emotionally draining, and financially unpredictable in ways previous generations never fully experienced. Imagine a 29-year-old woman living in Chicago in 2026. She works a respectable marketing job, earns above-average income, cooks at home most nights, and carefully tracks every dollar she spends. On paper, she looks financially responsible. But after rent, insurance, groceries, transportation, healthcare, taxes, student loans, and basic living expenses, there is barely anything left. Every month becomes a mental balancing act between survival and exhaustion. One unexpected expense, like a medical bill, car repair, or rent increase, suddenly destroys the entire budget she spent weeks organizing. This is the hidden reason why so many Americans quietly stopped believing budgeting alone can solve their financial stress. The issue is no longer only overspending. The issue is that modern living costs consume such a large percentage of income that there is very little room left for error. And psychologically, this changes people. Traditional budgeting advice was designed for a different era, where expenses were lower relative to income and financial stability felt more achievable. In previous decades, budgeting often helped families move forward because the gap between income and living costs was larger. Today, many Americans feel like they are budgeting simply to avoid disaster instead of building wealth. That emotional shift matters because constant financial pressure slowly drains motivation. People begin feeling punished even when they are responsible. They cut small pleasures, delay vacations, avoid social activities, and constantly monitor spending, yet still feel financially stuck. Over time, budgeting stops feeling empowering and starts feeling emotionally restrictive. Social media made this problem even worse in 2026. Americans are now exposed every day to luxury lifestyles, expensive travel, designer fashion, and online entrepreneurs claiming financial freedom. Even financially responsible people begin comparing themselves subconsciously. Someone trying to save money watches influencers casually spending thousands on vacations or cars, creating a feeling that disciplined living equals falling behind socially. Consumer culture understands this psychology perfectly. Modern advertising no longer sells products alone. It sells emotional escape, identity, confidence, and social status. People are not only buying shoes, phones, or cars anymore. They are buying temporary emotional relief from financial insecurity and social comparison. At the same time, modern digital spending became almost invisible. Previous generations physically handed over cash, which created emotional awareness around spending. In 2026, purchases happen instantly through phones, subscriptions, autofill payments, and one-click checkouts. Americans now spend money without fully feeling the transaction emotionally. Small recurring expenses quietly accumulate across streaming services, food delivery apps, memberships, digital products, financing plans, and convenience services. Individually, these purchases may seem harmless, but psychologically they normalize constant spending behavior. And because digital transactions feel less painful than physical cash, many people underestimate how quickly small habits compound financially over time. Another major reason budgeting fails is because many Americans now use spending as emotional coping. Modern life feels stressful, uncertain, and mentally exhausting. Long work hours, economic anxiety, rising prices, and constant online comparison leave people emotionally drained. As a result, spending becomes deeply connected to mood and stress relief. Someone may budget carefully for weeks, then suddenly overspend after a stressful day because emotionally they feel deprived. This is why many budgeting systems collapse. They focus entirely on numbers while ignoring human psychology. People are not robots. Financial behavior is often emotional before it becomes logical. The economy itself also changed in ways traditional budgeting advice struggles to address. Inflation in housing, healthcare, education, childcare, and insurance dramatically outpaced wage growth in many areas. This means even disciplined households often feel financially squeezed. In previous generations, cutting unnecessary expenses could create meaningful financial progress. But in 2026, the largest expenses crushing middle-class families are often unavoidable necessities. Rent alone can consume enormous portions of income in major American cities. Healthcare premiums continue rising. Grocery prices fluctuate constantly. Childcare costs rival mortgage payments in some areas. Under these conditions, budgeting becomes less about optimization and more about survival management. This is why many Americans secretly feel ashamed despite trying hard financially. Society still treats budgeting struggles like personal failures, even when larger economic conditions play a huge role. People blame themselves for not saving enough, while ignoring how expensive modern life actually became. This creates guilt, anxiety, and financial burnout. Some eventually stop budgeting altogether because emotionally it feels hopeless. Others become obsessed with extreme frugality, cutting every possible expense while still feeling insecure. Neither extreme fully solves the deeper issue. Many households are operating inside an economy where stability itself became harder to maintain. At the same time, corporations and financial systems increasingly profit from consumer instability. Credit card companies benefit when people carry balances. Buy now, pay later systems normalize debt for everyday purchases. Subscription models quietly drain monthly income. Algorithms constantly encourage impulse spending through personalized advertising. Modern capitalism became incredibly effective at monetizing human attention and emotional behavior. Budgeting today is not simply about self-control anymore. Americans are fighting against entire industries designed to encourage constant consumption every hour of the day. But perhaps the biggest reason budgeting fails in 2026 is because many people were taught outdated financial strategies for a completely different economic world. Traditional advice focused heavily on cutting coffee, skipping small luxuries, and saving slowly. While discipline still matters, modern wealth increasingly depends on income growth, investing, financial education, and ownership. Many Americans eventually realize they cannot budget their way into true financial freedom if wages remain stagnant while asset prices continue rising. That realization changes how younger generations think about money entirely. That doesn't mean budgeting is useless. Budgeting still creates awareness, discipline, and control. But in 2026, budgeting alone often cannot solve structural economic pressure. The Americans adapting best are usually the ones combining budgeting with higher income skills, investing, multiple income streams, and long-term financial strategy. Because the financial game itself changed, and many people are only now realizing the old rules no longer guarantee stability the way they once did. By 2026, one of the biggest financial traps facing ordinary Americans is not a single major purchase. It is the accumulation of endless monthly payments quietly surrounding everyday life. Modern consumers no longer simply buy products outright, they subscribe to lifestyles. Streaming services, cloud storage, food delivery memberships, car payments, financing apps, software subscriptions, gym memberships, online platforms, and buy now, pay later systems slowly transform the American economy into a system designed around recurring payments. Individually, these expenses often seem manageable, but together, they create a financial environment where millions of people wake up every month already owing money before they even buy groceries or pay rent. And psychologically, this changes how people experience money. Previous generations often felt a stronger emotional connection to spending because purchases were more visible and immediate. In 2026, payments happen automatically in the background.
Subscriptions renew silently, credit cards delay consequences, financing spreads costs across months or years. This creates the illusion that life feels affordable while quietly reducing long-term financial flexibility. And once people understand this, they start viewing money differently. They begin questioning whether constant consumption actually creates happiness or simply keeps people trapped inside endless cycles of work, stress, spending, and temporary relief. If you enjoyed this breakdown, make sure to like, subscribe, and turn on notifications for more deep financial documentaries and money psychology content right here on DollarNeck.